Hi, today I'm going to be talking to you guys a little bit about the history of insurance, so let's get started. With insurance, you are the policyholder, and the insurance company creates a contract with you to provide financial support at the time of a loss. Important terms to know include premium and deductible. The policyholder is responsible for paying a premium, a sum of money every month for this coverage. A deductible is a specified amount that the policyholder is liable to pay. For example, if you buy car insurance, you pay a premium to the insurance company based upon your risk. If you get into an accident with another car, the insurance company will help you pay for the amount of damage above your deductible. You may be wondering, however, but how did insurance start in America? I have an answer to that. Benjamin Franklin started the Philadelphia Contribution Ship for the insurance of houses from loss by fire in 1752. This company was the first American mutual fire insurance company, insuring around 15,000 people. By June of 1752, the company created 7-year-long renewable policies. In 1753, the first insurance payment was given out for a house fire on Water Street. 7 years later, Franklin also created the first life insurance company, called the Presbyterian Ministers Fund. Life insurance is to secure a financial future for your loved ones when you die. The second insurer in Maryland was the Baltimore Equitable, established in 1787. However, this company did not last long. Its first policy began in April of that year, and within the first year, Baltimore Equitable had 104 policies with a total coverage of over $130,000. The Industrial Revolution was a great change for America. For insurance, this meant that disability insurance and business insurance were necessary to have. Insurance policies constantly have been adding new coverages to common risks. For example, in 1864, Travelers Insurance Company sold its first accident policy, and in 1889, its first auto insurance policy. World War II also sparked the offering of group life and health insurance as well. Insurance companies, however, have a bad stereotype as companies who take your money and don't cover all your losses. This may stem from the bad companies who ran Ponzi schemes, demanded highly unfair premiums, attempted to create monopolies, and promised more coverage than capital that they owned. Early in their development, many insurance companies in 18th century America failed from speculative investments west, poor management of funds and loans, and inadequate distribution systems for payments. Adding to this, many more failed when the already weak company structures were crushed by tragedies like the Great Chicago Fire in 1871 and San Francisco earthquake and fire of 1906. However, insurance shouldn't be seen this way. Problems in the early insurance industry arose from lack of regulation, undeveloped statistical theories, and lack of general knowledge around insurance. Today, with insurance, people are able to get health treatments they need, rebuild houses that burn down, and provide money to their loved ones when they die. Insurance fell under federal regulation as decided by the Supreme Court in 1944. In 1945, Congress then passed the McCarran-Ferguson Act, which then put insurance under the control of each state. Other important regulation dates for insurance include the Paul v. Virginia ruling that insurance was not interstate commerce and was not subject to federal regulation in 1869. The National Insurance Conference began with 19 states who created uniform accounting standards, taxation guidelines, model laws, and regulatory goals in 1871. The 1890 Sherman Antitrust Act prevented insurers from controlling rates and gave states more power. These examples just show how heavily regulated the insurance industry has been in the past, and this regulation will have continued to evolve over time. The reason we're talking about this is because the three of us are going to work at insurance companies after graduation. The three companies, Travelers, Securian, and Thrivent, all have very rich histories that were impacted by the things that we talked about earlier in this video. I hope that you guys have found some cool things about insurance in this video and learned a little bit today. Thanks for watching.